As you get closer to retirement, or maybe you're already retired, it becomes very important to understand how you're going to be taxed on your withdrawals from accounts like your IRAs or your 401k. Most people use their employer sponsored plan like a 401k, or if they're a federal employee, it might be a TSP instead. Well, whatever it is for you, if you have an employer that has a plan that you get to put money into and tax defer it, that becomes for a lot of Americans one of the biggest accounts, the biggest source of wealth that they will take with them into retirement, perhaps even bigger than the value of their home. And so it becomes really important to understand, how are you taxed on that money when you pull that out, because you only can spend what you get to keep after tax is paid. Well, one question that a lot of people have is, do I have to pay FICA tax on withdrawals from my IRA? Well, the short answer is no, you don't. But really, to dive in and understand this a little bit better, it's important to understand what FICA tax is and how it works with a W-2 employee versus self-employed person. Well, FICA tax for a self-employed, a W-2, let's start with them, W-2 employee, is really a total of 7.65% total that's taken from your wages, and it goes into, and these percentage amounts right here, 6.2% of that goes to Social Security, and 1.45% of that goes to Medicare. And that adds up to 7.65. So you'll see, FICA on your pay stub, you'll see it there. And those funds are going in to support current Social Security recipients right now, and to support current beneficiaries of the Medicare system now. And because you paid into that, they keep a record of you having paid into that, which determines your eligibility for those programs once you reach the appropriate age. So that's how it works with the W-2 employee. Now, one interesting thing to note for W-2 employees, and when I say that, all I mean is you work for an employer, you get a W-2 at the end of the year, and you show that to your accountant, and the accountant records the wages that are on the W-2, and they put that onto your tax return so that you can calculate how much other taxes like income tax you may owe. Now, the interesting thing about this with a W-2 employee, if that's you, you have a boss, an employer that you're working for, is that you won't see the FICA tax on your tax return. So you may be in, say, like the 22% tax bracket, for instance, or you may show that your total tax for the year is X amount, and you think, okay, that's all the tax that I paid for the year. Well, it's not really. You actually paid 7.65% of your wages were already taken right from the get-go. Now, the reason that this is important to understand why you don't pay FICA tax on your IRA withdrawals is because the money that you can contribute to a 401k or to an IRA, you've already paid the FICA tax on it. So what they do is, you have your wages and they take FICA out of that, and then what you have left over, you can contribute to 401k, IRA, all whatever the retirement account is. And since the FICA has already been taken out of the funds that that are going to be contributed to these retirement accounts, that means that when you take money from those retirement accounts in retirement, you're not paying FICA on that. FICA just is applied to the wages. So that's how it works with somebody who has an employer. Now, it's a little bit different if you are self-employed. Your FICA tax is not actually called FICA, but it's a self-employed tax, and it's a little bit different. It's actually 15.3% total, and that includes 12.4% for Social Security and 2.9% for Medicare. Now, you'll notice that this is double what it was over here. And that's because if you're self-employed, not only are you the boss, but you're also the employee. So you pay both ends of the self-employed tax. So you'll pay that out, and you'll actually will see this on your tax return. You'll have a self-employed tax form that you'll have your accountant fill out for you, and you'll see that on there. And the way it works is very similar. So the profit that you had from your business, you're going to pay that self-employment tax on that. And then what's left over after that, those funds, that's what you're going to live on and everything. But it's also going to be what you can contribute to, say, like your IRA, for example. Okay. So since you've already paid the FICA, it's not FICA, but since you've already paid like the tax that's going to Social Security and to Medicare, before you contribute the funds that are left over is what you contribute into your retirement accounts. Then when you actually take those withdrawals from those retirement accounts, you don't have to pay any more self-employment tax on top of that. Now, in both these cases, if we're looking at things like traditional 401ks, traditional IRAs, things like that, it will be subject to income tax. So that will be a tax that you'll have to claim this as income, and then whatever tax bracket you fall into is how it's going to play out as far as what you're going to owe in taxes on your IRA withdrawals when you retire. So I hope that helps to kind of clear that up. And if you want additional resources to help you out planning your retirement, feel free to head over to retirementplanningmadeeasy.com. You can download a free copy of our essential step-by-step retirement guide, which is going to give you some more tips to help you out as you're planning your retirement. Thanks for watching. We'll see you on the next video.